Good morning, everyone out there, and welcome to the show. Listen, glad to have you guys here today. Now, we are in an unprecedented period in human history right now. I'm like a guy that works on a big dam, and say I got my house down below the dam and everybody else is living down below the dam. There's a big, giant dam full of water, and it's been raining for weeks. And I go up every day and I check the dam to see if there's any problems. What I notice is the water is overflowing. The floodgates are already overflowing, and the water keeps coming in. And I see big cracks developing in the side walls of the dam. And I live downstream from the dam, and so does all my neighbors and relatives and everybody. Everybody, the whole world's downstream from the dam. They got this massive amount of water building, and the dam is swelling higher and higher every day, and I see these cracks getting bigger and bigger. Well, it's the same way with the financial system. That's my job, is to go out there and examine these cracks. And I see these cracks growing and new cracks developing every single day in this world's financial system. Any one of which, these cracks, could bust open a dam and all the water flow down and create a tremendous... But before the thing breaks, everybody living downstream, they're not aware of what's really going on. I'm aware of it. I see what's happening here. If I had a desk in front of me right now, honest to God, I'd pound my fist on the desk and I'd say, listen, you guys, we are in a bad situation right here, and if this thing breaks, we're all in jeopardy. The whole world. Now, as much as I hate the world's central banks, because they've created this situation, they're the only thing that stands between us. When this dam breaks, they're the only thing that stands between us and utter catastrophe. The whole thing, everything is all linked in together now. What they've done is they've linked these chains of derivatives in, and we were just hours away in 2008 from the whole thing melting down completely. And now things are worse. More leverage in the system. So now what's happened? We've come into this little period right now of calm, or relative calm. And the markets, they're looking for this good news. They're like a bunch of chickens, when the farmer comes out and throws some grain out for them and they all scramble for it. Any little good news, they scramble for it and the market goes up. So now they say right now that Trump's going to delay these tariffs for 2 weeks. Oh, the market pop. Futures go way up, pow, All they're interested in is making money big time. They're out there, but they're not paying attention to their head. It's like being in an art museum and being too close to the painting and you can't see what it is. You stand back a ways and then you can view the painting for what it really is. And that's what I'm doing. I'm standing back and looking at the overall picture of this economy, and I can see that everything is so... It's frightening, to tell you the truth. When you really get involved and you really start to take a look at how the financial system is over-leveraged and how it actually functions, and how debt is actually what becomes our money, is actually all debt and it's all over-leveraged, that there's a potential there for something unimaginable in proportion to happen. And I mean, what could go wrong? What could go wrong? Everything could go wrong. And the only thing standing between us and that is a corrupt central bank? What a situation we're in, guys. Do you got your gold, silver, and crypto put away for yourself? Do you got your $5 bills put away for yourself in case of an emergency? A little stack. What you need is a little stack of $5 bills. You need a closet in your home that you empty out, and you need to fill it with bottled water, canned goods, and just one closet. That's all you need. Empty everything out of your closet. Put in bottled water in the bottom. Put in canned goods above that, right? And have some $5 bills put away for yourself. And make sure you don't forget to buy the toilet paper to put in there too. But, toilet paper's one of the lighter goods that go up on top. You know, flashlight and flashlight batteries. Have that closet, put it away, shut the door, and forget about it. You're going to be ready when your neighbors aren't, when this crisis hits. So now let's get into it. Let's open up the charts right here, and let's get started with the gold price. Gold's shooting up this morning some. It's going down right now, but it crested up. It was up. It was up like 15.23 or something like that. Now it's down to 15.13. So we're seeing volatility in the gold and silver market today. Volatility. Let's take a look at silver. 1812. I knew this correction was coming in gold and silver ahead of time. To be honest, I did a show, and I put it away. I never aired it. Several days when the price was still increasing on gold and silver about this correction, because I wasn't absolutely certain it was going to happen, and I didn't want to seem like if it continued to go up, and I come on and put my show on about the correction, in price. I didn't really want to come out real heavy with it because I wasn't completely sure we were going to get this correction. But I had a good feeling that we were. I really thought we were, so I didn't put the show on the air. I didn't air that particular show. I just did it and I put it away in the files. Anyway, but now we're in the correction, and I've set a floor on it. A floor of $17. I don't think it's going to go below 17. And also, I don't think gold's going to go below 1470, but we're in the middle of this correction now, and I think there's an explosive move coming to the upside a couple months from now that's going to wipe out this correction, this little correction we're having right now, and we're going to see a surge in price. We're going to see silver, I think, break $20, and we're going to see gold break like above 1550, and I think that's what's coming. Not too distant in our future either. So that's basically what I think is going to happen. And let's take a look now at cryptocurrency market capitalizations. Cryptocurrency, I think, is going to do really well too. But it's been in the doldrums a little bit now. It had a little bit of a price correction. It's come down from about 13,800 all the way down to right this morning. It's 10,277. And we're looking at these prices have stabilized, and they're basically floating along sideways. Let's take a look at the Dow Jones Industrial Average this morning. And what we're looking at is 27,197. That's what we're looking at in the Dow Jones Industrial Average today, and it's up, looks like 65 points. Just let me refresh the page. 64 points up today on the Dow. This is all about this trade war right now. They got hopes. The fact that Donald Trump is holding off for a couple weeks on imposing these new tariffs, evidently. But I don't think the trade war is really going anywhere. I don't think it's going away anytime soon. I think we're basically stuck in this trade war, and the markets are going to realize this at a certain point. Let's take a look now at crude oil. Wow, we got a big drop in crude oil today, $1.72. That's a big, substantial drop. Looking at the 5-day chart, you can really see this drop in crude oil. Look at this. Crude oil is extremely important, and crude oil prices are extremely important for the world's markets, And when we see a big drop like that, that's a big drop, over 3% in one day. That's a big drop for crude oil. So that's the biggest mover and shaker out there today, crude oil. Look at the drop. U.S. Treasuries today. Let's see what's going on with U.S. Treasuries. We're looking at yields dropping a little bit today, and they're basically dropping similar to what they rose yesterday. So if we go back 2 days ago, they're basically the same as they were 2 days ago, or more or less. So we get 1 day up, 1 day down. I just got this feeling that the long end of the yield curve could pop back up. We could see, and not a small rise, but a large rise in the long end of the yield curve. If these capital inflows stop, and if they stop suddenly, I don't understand the philosophy why investors think that bonds are the biggest safe haven in the world. You know, the United States, if you looked at it as a corporation, it's bankrupt. So you're buying bonds, or you're buying bonds from a corporation that's bankrupt. Does that sound like a smart idea? But you know, they got a printing press. There's only two ways out of this situation. They could declare bankruptcy and make all the bonds worthless, absolutely worthless. This would this would be terrible. The consequence of that is unthinkable, absolutely unthinkable. They can't even go there. Let's not even talk about that, because that's not really a possibility. They're not going to go there. They're not going to default on the U.S. Treasury bonds. Ain't going to happen. Just like they're not going to default on making the Social Security payments and all these other payments. Ain't going to happen. So there's only one other direction they can go with this. They're going to have to print the money to pay all of the unfunded law obligations. They're going to have to print the money to pay off all the Treasury bonds and everything. They're just going to print. This is endless. It's a wonder it hasn't led to hyperinflation already. It's absolutely a wonder. But if they continue with this, and this is the ultimate conclusion of this in the end, is it's going to hyperinflate the currencies. That's the ultimate conclusion. And it's just amazing how it's taken so long to get there before people lose confidence. But they keep pushing it, and people will lose confidence in the end. Let's take a look now at the U.S. dollar index. 98.8 today. Had a little pop in price. Now it's settling back down again. You know, and it's funny today is generally the dollar shouldn't move line in line and step in step with gold. Let's take a look at the gold chart for a second. Look at that. You see that? It popped up, now it's going down. Now look at the dollar. Popped up, now it's going down. They're moving step in step. Generally there's an inverse relationship between the dollar goes up, gold goes down. The gold goes up, the dollar goes down. Today they're moving with each other. Really weird. The markets everything is so messed up. So messed up because of this manipulation that's went on, that it's impossible actually to even predict when this crisis is coming. But we see the big cracks in the dam. We know it's coming, and we know it's coming soon. But exactly when? Now let's take a look at this article. 60% of Americans believe a recession is coming, but they're continuing to pile up debt at a frightening pace. In other words, consumers out there, consumer confidence is high. They're spending money like crazy out there, and they're putting it on their credit card. It says that they're piling up debt at a frightening pace. You know? It's just like this picture here. It shows a guy rolling the giant ball up the hill, and the hill's getting steeper and steeper. We all know how that ends. Picture that's a giant bowling ball. It weighs more than he does. We all know how that's going to end. I love that illustration. Listen, thank you guys for listening to this show, and we'll catch you guys again very, very soon. Bye-bye, guys.